You've heard of Bitcoin and Ethereum, the giants of the cryptocurrency world, famous for their high prices and complex mining processes. But Pi Network is a different kind of cryptocurrency, one that aims to break down barriers and make digital money truly accessible. Its mission? To put the power of digital currency in the hands of anyone, anywhere, using just a smartphone, no matter your background or technical skills. There's no need for expensive hardware or advanced knowledge. Just download the app, tap once a day, and you're mining Pi. Pi's founders, a team of Stanford graduates, designed it to be fair, inclusive, and easy to join. This vision has already attracted tens of millions of users from all walks of life, creating a truly global movement. The network grows through a unique referral system. Invite friends, boost your mining rate, and help build a worldwide community of Pi users. Unlike traditional crypto mining, Pi's process is energy efficient. It won't drain your phone's battery or eat up your data, so you can participate without worry. The excitement comes from the hope that today's free Pi coins could become valuable assets in the future, just like early Bitcoin once did. But here's the catch. Pi is still in a testing phase, and its future is uncertain. The coins you mine are currently locked within an enclosed network, meaning you can't trade or spend them freely just yet. The Pi team is still hard at work, building the technology and ecosystem needed for a full public launch and real-world use. This makes Pi both intriguing and speculative, a project full of promise, but also uncertainty. It's a massive experiment in digital currency, and millions are watching closely to see if Pi can truly bring crypto to the masses. Will Pi Network succeed and change the way we think about money? That's the big question everyone's asking. For now, it's all about potential and patience. Only time will tell if Pi Network can turn its vision into reality. Let's talk price. In the world of cryptocurrency, price action is often unpredictable, and Pi Network is no exception. Pi isn't officially trading everywhere, but some exchanges list IOUs, hinting at its value and sparking speculation among traders eager to get in early. As of March 25, 2026, Pi sits just under 19 cents, after a recent dip that caught many holders off guard. The last 10 days saw a sharp drop from 30 cents, mirroring a broader crypto market downturn and shaking investor confidence. When Bitcoin and Ethereum fall, smaller coins like Pi usually follow, swept up in the same waves of volatility. Despite the drop, Pi is up nearly 10% over the past month, showing earlier momentum and hinting at underlying interest from the community. But zoom out, over the past year, Pi has lost more than 80% of its value, a sobering reminder of how quickly fortunes can change in crypto. This kind of volatility is common for new crypto projects, especially those still building out their ecosystems and user base. News, market sentiment, and big coin movements all impact Pi's price, making it sensitive to both global events and crypto-specific developments. Right now, Pi is clinging to its 50-day exponential moving average, a key technical level that traders watch closely for signs of strength or weakness. If it falls below, more downside could follow, potentially triggering another wave of selling as confidence wavers. For now, Pi's price is a wild ride, typical for a project still finding its footing and searching for stability in a turbulent market. The question is, can it stabilize before the mainnet launch, or will volatility continue to define Pi's journey in the months ahead? Beyond price, Pi Network is seeing major market activity. Over 1.1 million Pi tokens were withdrawn from big exchanges like OKX and Kraken in the last 24 hours. When users pull tokens off exchanges, it usually signals long-term confidence. This trend is especially strong in the US, where investors are buying and holding Pi. Large withdrawals reduce available supply, which can help stabilize or even boost the price. Pi's market cap is now about $1.88 billion, impressive for a project still in development. But the crypto world is fiercely competitive, with new projects launching constantly. Enter Siren, a powerful new rival that's shaking up the market. Siren's rapid rise is challenging Pi's position and drawing investor attention. This new competition adds pressure and uncertainty for Pi's future. The landscape is shifting fast, and Pi must adapt to stay relevant. The next moves will be crucial for its community and growth. Meet Siren, the AI-powered crypto on BNB chain that's taken the market by storm. In a space where new projects launch every week, Siren has managed to stand out from the crowd almost overnight, drawing attention from both seasoned investors and curious newcomers. In record time, Siren's market cap soared past $2 billion, overtaking Pi and sending shockwaves through the crypto community. This rapid climb has made headlines and sparked debates about what's fueling such explosive growth. Its price jumped 95% in just 24 hours, up 545% in 2 weeks, and over 1,200% this month alone. These numbers are almost unheard of, even in the fast-moving world of digital assets. Trading volume hit $150 million, showing massive interest and a frenzy of buying and selling activity. The buzz around Siren is impossible to ignore. Siren's explosive growth is rare, even in crypto, where volatility is the norm. Analysts are scrambling to understand what's driving this surge. For Pi, this means tougher competition and a fight for investor attention. The landscape is shifting, and Pi can no longer rely on being the only game in town. Pi's mobile-first approach and huge user base were once unique, but Siren's AI angle is capturing imaginations and money. The narrative is changing, and users are eager for innovation. Investors are always chasing the next big thing, and right now, that's Siren. The excitement is palpable, and everyone wants a piece of the action. Pi's enclosed phase makes it harder to compete for now, limiting its ability to respond quickly to market shifts and new challengers. The lesson? In crypto, innovation never stops. The pace is relentless, and only the most adaptive projects survive. Pi must deliver real progress and value to keep its community engaged. The pressure to innovate and evolve has never been greater. Siren's rise is a wake-up call. Standing still isn't an option. The crypto world rewards those who move fast and think ahead. The pressure is on for Pi to prove itself, and the next few months will be crucial in deciding which project leads the next wave of crypto innovation. Traders use technical analysis to predict price moves, and for Pi, the outlook is mildly bearish. Pi is trading below key trend lines, the 50, 100, and 200-day exponential moving averages. This signals downward momentum could continue unless Pi breaks above these lines. The Relative Strength Index, RSI, sits at 48, neutral, but with soft selling pressure. The MACD indicator also shows modest downside momentum. In short, Pi's price is drifting lower, not crashing, but struggling to find support. Traders are watching these indicators closely for any sign of a turnaround. Until Pi breaks above resistance, caution rules the day. The charts tell a story of uncertainty and waiting. For now, Pi is in a holding pattern. The next big move will depend on news and market sentiment. Support and resistance are key concepts in technical analysis. Think of them as price floors and ceilings. Pi's immediate support is at 17.36 cents. If it holds, a bounce is possible. If it breaks, the next support is at 15.56 cents, a significant drop. On the upside, resistance sits at the 100-day EMA, around 19.8 cents. Breaking above this would be bullish, signaling buyers are back. The next major resistance is the March 7 high at 23.96 cents. These levels are psychological barriers for traders. Breaking through resistance can spark optimism and attract more buyers. Watching these levels helps investors understand the ongoing battle between buyers and sellers. For Pi, holding support and breaking resistance are crucial for any upward trend. The market is watching closely. Every move counts in this volatile environment. Pi Network's promise is exciting, but the risks are real. It operates in a regulatory gray area. Some countries have already issued warnings. The referral system, while great for growth, looks pyramid-like to some regulators. If authorities crack down, Pi could face serious legal trouble. Data privacy is another concern. Users must submit personal info for KYC verification. A data breach could expose millions and damage Pi's reputation. Scammers are also targeting the Pi community with fake sites and phishing attacks. The team issues frequent warnings, but users must stay vigilant. In crypto, if something sounds too good to be true, it probably is. Always double-check sources and never share sensitive info. The risks are high, so caution is essential. Stay informed and protect yourself. Pi Network remains in its enclosed transitional phase, not yet a fully open cryptocurrency. The mainnet isn't public, so coins can't be freely traded or used. This long development period fuels both hope and skepticism. Limited liquidity and lack of major exchange listings mean Pi's price is uncertain and varies widely. IOUs on smaller exchanges are just promises for future coins. Governance is another issue. Pi claims to be decentralized, but the core team still makes all major decisions. True decentralization will require more transparency and user participation. These factors, slow progress, enclosed network, centralized control, spark debate. Millions are hopeful they're early adopters of something big. Others worry about the slow rollout and pyramid-like structure. The divide between excitement and skepticism defines Pi's current state. For now, it's a waiting game. The next phase will determine Pi's fate. The big moment everyone's waiting for is the open mainnet launch. This will connect Pi to the broader blockchain world and allow real trading. The core team hasn't set a date, but all eyes are on them. Watch for technical updates. Security, scalability, and ecosystem development are key. Pi's value depends on real-world utility, so new apps and partnerships matter. Regulatory changes could help or hinder Pi's progress. The team must navigate complex legal landscapes to succeed. Ultimately, Pi's future depends on delivering its ambitious vision. Users should stay patient, informed, and cautious. Watch for official updates and beware of scams. The road ahead is uncertain but full of potential. If Pi can launch successfully, the payoff could be huge. For now, the world is watching and waiting.